Hey everyone, and welcome to this deep dive. We're going to be talking options trading today.
Yeah, options.
And, a lot of people out there, I think, find them pretty intimidating.
They can be.
So we're going to try to really unpack this stuff in a way that's clear and concise,
Yeah, break it down.
maybe even fun.
Absolutely.
And we've got some great insights here from the podcast, The Trading Edge, that we're going to be drawing on.
Yeah, some good stuff in there for sure.
Both beginners and folks who maybe have a little bit of experience already, but really want to kind of up their game.
Yeah, get beyond just the basics and how you can really put options to work for you.
Okay, so why don't we just jump right in? Can you give us the quick and dirty on what exactly options are?
Sure. So options are basically a special ticket that gives you the right, but not the obligation
Okay.
to buy or sell a stock at a specific price, which we call the strike price, within a certain time frame.
So you're not locked into a buy or sell order like you are with regular stocks.
Exactly. You have a choice. And that's where the power of options comes in.
So I've heard these terms calls and puts.
Right.
What's the difference?
So if you think a stock is going up, you'd buy what's called a call option.
Okay.
That gives you the right to buy the stock at that set price so you can profit from the increase.
Got it.
Now, if you think the stock's going down,
Yeah.
you'd buy a put option.
Okay.
That gives you the right to sell at a certain price so you profit if your prediction is right.
So you're basically speculating on which direction the stock is going to go.
Yeah.
But why not just buy or sell the stock itself? Why use options?
Well, one of the big advantages is leverage.
Okay, leverage. I knew that was coming.
With options, you control a much larger amount of stock than you'd be able to with the same amount of money.
Ah, so that means your gains can be bigger.
They can be, yeah.
But,
But it also means your losses can be bigger.
yeah, there's always a catch.
Right. So you have to be careful.
Risk and reward.
Exactly.
So besides leverage, any other reasons why someone might choose options?
Sure, options give you a lot more flexibility than traditional stocks.
Oh, how so?
Well, with stocks, you're usually hoping the price goes up, right?
Yeah.
But with options, you can actually make money even if the price goes down.
Wait, really? How's that work?
Remember those put options we talked about?
Right.
Say you think Tesla stock is going to drop. You could buy a put option
Okay.
that gives you the right to sell Tesla at, let's say, $250.
Okay.
If the price drops to $200, your put option becomes more valuable.
Because you essentially locked in that price.
Exactly.
Pretty cool.
Yeah. And then there's also hedging.
Hedging. Isn't that something farmers do?
Kind of. Yeah.
Right.
In the options world, hedging is about protecting yourself against losses.
Okay, so it's like an insurance policy for your portfolio.
Yeah, exactly. Like if you own shares of Apple, but you're worried about the market tanking,
Yeah.
you could buy put options on Apple.
Okay.
So if the price drops, those puts would go up in value and kind of offset some of your losses.
So you're basically buying peace of mind, like having car insurance?
Exactly.
Okay, I get it. So we've got leverage, flexibility, and hedging. It sounds like options trading opens up a whole new world.
It does.
But I'm guessing it's not as simple as just randomly buying calls and puts.
No.
There must be actual strategies to it, right?
There are definitely specific strategies to use for different situations.
Okay, so let's dive into some of those.
Okay.
What are some popular options trading strategies that people use?
One common one is called covered calls.
Covered calls.
Yeah, this is a good one if you already own some stocks
Okay.
and you want to make some extra money from them.
Okay, how does that work?
Basically, you're selling a call option on stock you already own.
So I'm selling the right for someone else to buy my stock.
Right, and you get paid a premium for that.
Okay.
And if the stock price stays below the strike price you set, you get to keep that premium.
Okay.
Now, if the price goes above the strike price, the buyer might exercise their option.
Oh, so they could actually buy my shares.
They could, but you'll still profit from the premium and selling at the higher price.
So it's kind of a win-win in a lot of ways.
It can be. Yeah, especially if you don't think the stock will go up too much in the short term.
Okay. What about for someone who's a little more cautious, maybe a little more risk-averse?
Well, if you're looking for a way to protect your investments, you might consider protective puts.
Protective books.
Remember we talked about those being like insurance?
Right, the insurance policy strategy.
Exactly. So let's say you own Amazon stock and you're worried about it going down. You could buy a put option on Amazon.
Okay.
And if the price drops, the value of your put option goes up.
So it offsets your losses.
Right.
So you're basically paying a premium for that peace of mind.
Exactly.
Okay, now what if I'm expecting some big price swings, but I'm not sure which way the stock is going to go?
In that case, you might look at something called straddles or strangles.
Oh, those sound kind of fancy.
They're a little more advanced. Yeah, these are for when you think the stock is going to move a lot,
Okay.
but you don't know if it's going to go up or down. With a straddle, you buy both a call and a put option on the same stock at the same strike price.
Okay, so you're covered either way.
Right. If the stock moves a lot in either direction, you make money.
So it's like saying, I don't know which way this is going, but it's going somewhere.
Exactly. A
Huh?
strangle is similar, but it uses different strike prices for the call and the put.
Okay.
So you're trying to profit from even bigger price swings.
Right. So straddles and strangles are for the more adventurous trader.
You could say that, yeah.
But just like with any of this stuff, you got to understand the risks, right?
Absolutely. Risk management is key.
Speaking of risks, what are some of the common mistakes that people make when they're trading options? What are some pitfalls to watch out for?
Well, one mistake is not understanding the Greeks.
The Greeks, like the letters of the alphabet.
Yeah, they're these Greek letters that represent different factors that affect option prices.
Ah, so like a secret code I need to crack?
Kinda. Each Greek tells you something different.
Okay, give me an example.
Sure, delta, for example, tells you how much an options price is likely to change for
Right.
every dollar that the stock price moves.
So if delta is high, the option price will move more.
Exactly.
Interesting.
And then there's theta.
Theta.
Yeah, theta measures time decay, which is how much the option's value goes down as it gets closer to expiring.
Oh, right, like that melting ice cube we talked about.
Exactly.
So I need to keep an eye on that, especially when I'm buying options.
Yes, definitely.
Okay, so not understanding the Greeks, what else?
Another common mistake is overtrading.
Overtrading meaning?
Trading too much, too often, chasing those quick profits.
Yeah, it's easy to get caught up in that.
It is, but it can be really dangerous.
Okay, so discipline is key.
Exactly. You need to have a plan and stick to it.
So a trading plan, what does that look like?
It should outline your goals,
Okay.
your risk tolerance, your entry and exit points.
So you're not just winging it.
Right, emotions can really get in the way of good trading.
Okay, so no emotional trading. Got it.
Yeah.
Any other tips for beginners?
Yeah, try paper trading before you use real money.
What's paper trading?
It's basically a simulator where you can practice trading without risking any actual money.
Ah, so I can test out different strategies and see how they work.
Exactly. It's a great way to learn and build your confidence.
Okay, so start small, educate yourself, have a plan, and practice.
That's a great recipe for success.
This has been awesome. I feel like we've covered so much already.
We have, but there's still more to come.
Okay, well, we're going to take a quick break, and then we'll be back to dive even deeper into the world of options trading. Welcome back, everyone. We're ready to jump back into this fascinating world of options trading.
Yeah, where'd we leave off?
Ah, yes, those common mistakes to watch out for. Okay, so mistakes,
Yeah.
everyone makes them, but it's better to learn from other slip-ups than our own, right?
Absolutely. And one of the biggest ones, like we touched on earlier, is not understanding those Greeks.
Right, right. The Greeks, those mysterious Greek letters, they still sound kind of like a fraternity to me.
Well, think of them more like your options dashboard. They're these key metrics that help you figure out how an options price will change.
Okay, so like my options GPS.
Right.
Got to have that to navigate, right?
Exactly. And to be honest, you don't have to be a math whiz to grasp the basics here.
Oh, thank goodness.
Take delta, for example. Delta basically tells you how much an options price is likely to move for every dollar the stock price changes.
So if the delta's high, the option price jumps around more.
You got it. And understanding delta, that helps you estimate your potential profits and losses.
Okay, so delta's about predicting those price swings. What about the other Greeks? What do they do?
Well, each one gives you a different piece of the puzzle. Theta, for example, that measures time decay.
Ah, yeah, time decay.
Yeah.
How much an option loses value as it gets closer to expiring, like that melting ice cube.
The very same. And that's a big one to remember when you're buying options because time's ticking away.
Okay, so time decay, it's like a little countdown timer on those options. Got
Yeah.
it. What other mistakes do people tend to fall into?
Overtrading is a big one, that whole chasing those quick profits, getting swept up in the excitement.
Oh, yeah. Easy to do when you see those numbers going up and down. Makes you want to jump in all the time.
That's exactly when you need to pump the brakes. Options trading, it's not a slot machine. You got to have a plan and stick to it.
Discipline.
Discipline.
Right. Emotions can really mess you up when it comes to trading.
Okay, no emotional roller coasters while trading. Check. Anything else I should be careful about?
Don't forget implied volatility. That's essentially how much the market thinks a stock's price is going to fluctuate.
So if everyone's expecting big price swings, implied volatility is high.
Yep. And usually that means option prices are going to be higher too.
Interesting. So how do I use that to my advantage?
Well, let's say you think the market's overreacting, that the stock's not going to be as volatile as everyone thinks.
So, like, if everyone's freaking out, but I think they're wrong, right, then the options might be overpriced. And that's a chance to potentially sell them and make a profit if that stock price doesn't jump around as much as everyone expected.
So it's about spotting when the market's getting carried away, like those rumors that send a stock sky high. I like it.
And hey, let's be real for a minute. Options trading, it's not for the faint of heart. You gotta be ready for the possibility of losses.
It's a risk, like anything in the market.
Exactly. But with the right knowledge, a little bit of discipline, and good risk management, it can be a powerful tool in your financial toolbox.
Okay, risk management, got to keep that in mind.
Yeah.
But what about all those charts and graphs people use? Does technical analysis play a role in options trading too?
Definitely. It helps you see those trends, those patterns, and how stock prices have been moving, gives you a glimpse of what might happen next.
So like you're looking for clues in past price movements, like those charts with the squiggly lines that make my eyes cross.
Those very ones, don't let them scare you. Those charts, they can actually reveal a lot of useful information, like support and resistance levels.
Support and resistance levels, those are.
Think of them like price points where the stocks had trouble breaking through, kind of like it hits a ceiling or a floor.
Okay, so if it's bumping up against that resistance level, I might be less likely to buy call options since it might not break through.
Right. Technical analysis can help you fine-tune your timing, know when to get in and when to get out.
Timing is everything, they say.
But just like anything, it's not foolproof. It's just one more piece of the puzzle. Got to combine it with other types of analysis, like looking at the company itself, how's it doing financially?
I look under the hood.
Exactly. The more info you've got, the better your decisions.
It's all starting to make sense now. I'm feeling a lot more confident about exploring options trading. What would you say are the most important things to remember when getting started?
Start small.
No.
Don't bet the farm right off the bat, especially while you're learning the ropes.
Baby steps, baby steps.
Exactly. Dip your toes in the water, get a feel for things, and never stop learning. That's key.
Knowledge is power.
It really is in this game. There are tons of resources out there, books, online courses, podcasts like the one we mentioned, The Trading Edge.
Okay, homework assigned.
And hey, once you've done your homework, the next step is having a trading plan. That's crucial.
Okay, so map it out.
Exactly. Write down your goals, what level of risk you're comfortable with, when you'll buy and sell, all that stuff. Because emotions, they can really mess you up when trading.
So having a plan helps you avoid those impulsive trades.
Absolutely. And finally, don't underestimate the power of paper trading.
Paper trading, that's like fake trading.
Yeah, it's basically a simulation. Most trading platforms have it. You can practice trading without risking any real money.
Ah, so I can test out my skills without losing my shirt.
Exactly. It's a great way to build confidence and see what works, what doesn't.
Okay, so start small, keep learning, have a plan, and practice with paper trading. Sounds like a solid plan.
It is.
But before we move on, we got a great question from a listener who wants to know how to pick the right strike price. What factors should they consider?
Choosing the right strike price, well, it depends on a few things. First, what's your overall strategy? What do you think the market's going to do?
Okay, so big picture stuff first.
Right. Like, if you're bullish on a stock, you might choose a strike price for your call option that's a bit higher than the current price. You're basically betting the stock will go up past that strike price before your option expires.
So aiming for more profit, but more risk too if it doesn't go up that high.
Exactly. Now, if you're a bit more cautious, you might go for an in-the-money option. That means you choose a strike price that's below the current price for a call or above the current price for a put.
Okay, so lower risk, but probably lower reward too. Makes sense.
And don't forget about volatility. That plays a big role too. If a stock's price is bouncing all over the place, you might need to choose a strike price further away from the current price just to account for those swings.
So like giving it a wider berth, just in case.
You got it. And the biggest thing is, connect your strike price choice back to your strategy and your outlook on the market. Are you trying to maximize your profit, or are you playing it safe?
Right, what's the goal?
Exactly. What's your time frame? How volatile do you think the stock's going to be? All that comes into play.
It's like building a custom suit tailored to the situation.
Perfectly put. And hey, don't be afraid to adjust your strike price if the market throws you a curveball. Options trading, it's all about being flexible, ready to adapt.
Okay, so stay nimble.
Exactly. And that's where rolling options can come in handy.
Rolling options, what's that?
It's a way to kind of shift your position as the market changes. Basically, you close your current position and open a new one with different terms, maybe a different strike price or a later expiration date.
So like hitting the reset button.
In a way, yeah. There are a bunch of reasons why you might do this. Like, say your call option's doing well, the stock's moving in your favor, you could roll it up to a higher strike price. Lock in some profit, but still keep some upside potential.
Ride the wave a bit longer.
Right. Or, on the flip side, if the stock's going the wrong way, you could roll it out to a later expiration date, gives it more time to maybe recover.
So giving your trade a second chance.
Exactly. Rolling options, it's a tool for managing risk and for maximizing profits. It's something experienced traders use all the time to stay on top of things.
Okay, rolling options. Got to remember that. Now let's switch gears and talk about something a little less glamorous but super important: taxes. How do those work with options trading?
Well, first thing to remember is that options, just like stocks, they're capital assets. Meaning any profit or loss from trading them, that's subject to capital gains taxes.
So Uncle Sam gets his cut if I win, but I can write off losses too.
Exactly. And the rate you pay, that depends on how long you held the option. Short-term gains, if you held it less than a year, that's taxed at your regular income tax rate. But long-term gains, that's a more favorable rate.
Gotcha. Holding for the long haul can pay off in more ways than one. Anything else to keep in mind about taxes?
Stay organized, keep good records of all your trades, confirmation statements, account statements, all that good stuff.
Okay, no creative accounting.
Definitely not. Always best to be prepared come tax time. Now, before we wrap this up, there's one more advanced concept I want to touch on: option spreads.
Option spreads.
Yeah, these are super useful. Instead of just buying or selling one single option, you're combining multiple options on the same stock.
Okay, so a little more intricate.
A bit, yeah. But it lets you create a really strategic position.
Give me an example.
Okay, so say you're optimistic about Apple, you think it's going up, but you also want to limit your risk. You could use a bull call spread.
Bull call spread.
Right. You buy a call option with a lower strike price, and then at the same time, you sell a call option with a higher strike price. Both of them have the same expiration date.
So you're kind of setting up a range where you think the stock price will land.
You got it. And your maximum profit, that's limited to the difference between those two strike prices minus what you paid for the options. But your maximum loss is also limited to what you paid for the options.
So you're controlling the downside, but still in the game if it goes up.
Exactly. And hey, there are all sorts of option spreads out there. Each one's got its own risk and reward profile.
A whole toolbox of strategies.
Options give you so much flexibility, it's amazing. But remember, knowledge and discipline are key here. Don't dive into the deep end until you're comfortable with the basics.
Solid advice.
And never forget, options trading, it's a journey of learning, always something new to discover.
This has been so insightful. I feel like I've learned so much about options trading, from the basic building blocks to the psychology of it all.
Me too. It's been a great conversation.
We've got one more part to go in this deep dive, so stick around. We'll be right back. All right, welcome back, everyone, for the final part of our deep dive into options trading.
Yeah, we're going to wrap things up here.
We've covered a lot of ground, but there's still a few more pieces of the puzzle I think we need to talk about.
Definitely, we've talked about the strategies and the risks.
Right.
But one thing that's really important to understand is the psychological side of options trading.
The psychological side.
Yeah, like how your emotions can affect your decisions.
Oh, yeah, that makes sense. Everyone gets emotional about money.
Exactly. And those emotions can really mess you up when you're trading.
So what are some of the psychological traps that people fall into?
Well, fear and greed are two big ones.
Oh, yeah, I can see that.
Like if you're afraid of losing money,
Yeah.
you might sell your options too early.
Right, and miss out on potential profits.
Exactly. Or, on the other hand, if you get greedy,
Yeah,
you might hold on to a losing trade for too long.
hoping it'll turn around.
Yeah, but that can just make things worse.
So how do you avoid those emotional pitfalls?
Well, that's where discipline comes in,
Okay,
and having a solid trading plan.
right, that roadmap we talked about.
Exactly. Your plan should help you stay focused on your goals and not get swayed by your emotions.
Okay, so no emotional trading. Got it.
Yeah.
Any other mental traps to watch out for?
Confirmation bias is another one.
Confirmation bias.
Yeah, that's where you only look for information that supports what you already believe.
Ah,
Yeah.
so if I'm convinced a stock is going to go up,
Right.
I might ignore any signs that it's actually going down.
Exactly. You got to be willing to challenge your own assumptions.
Okay, so be objective, Don't get too attached to your own ideas.
Right, and don't be afraid to admit when you're wrong.
Yeah, everyone makes mistakes.
They do. The important thing is to learn from them.
So it's all about continuous improvement, always trying to get better.
Exactly. Trading is a journey, not a destination.
Okay, so we've talked about the strategies, the risks, the psychology.
Yeah.
Anything else we need to cover before we wrap up?
Yeah, one last thing, and this is really important.
Yeah.
Options trading is not a get-rich-quick scheme.
Right. It's not a magic bullet.
No, it takes work, it takes discipline, it takes knowledge.
And a bit of luck, probably.
Maybe a little bit, yeah. But the most successful traders are the ones who are always learning and adapting.
So it's a constant process of education and refinement.
Exactly.
Well, this has been an amazing deep dive. I feel like I've learned so much.
Me too. Glad we could help.
We've covered so much ground, from the basics to some pretty advanced stuff.
We have.
I think our listeners are going to be well equipped to start exploring the world of options trading.
I hope so. It's a fascinating world out there.
And remember, everyone, knowledge is power. So keep learning, keep practicing, and who knows, maybe you'll be the next options trading guru.
That's right. Good luck out there, everybody.
And that's a wrap on our options trading deep dive. Thanks for joining us, and we'll catch you next time.